Have you ever pondered if the United States government could sell its bonds? The upcoming question is, can the US sell $119 billion worth of bonds? This has never happened before, and it might not happen again. But this time may be different. The stakes are high, and many analysts have already been sounding the alarm bells. Many are even predicting that we might be on the brink of an economic collapse. That sounds like a lot of money, and it is. In fact, some people think that there's no way that they would be able to do it. Others are saying that it'll be fine because they always manage to pull something like this off. Only time will tell what happens, but while we wait, here are 5 things you need to know about the US bond market turmoil. Welcome to our channel, a place where you get the most unbiased and up-to-date news. Do make sure to subscribe and like the video to get updated with everything that's going on in the world. Number 1, US bond market in turmoil. Can $119 billion be sold? It's a question that's on everyone's minds as the United States prepares to sell more than $119 billion worth of bonds. The US government regularly issues bonds to finance its operations, and this latest sale is part of its routine refinancing efforts. However, the sheer size of the offering has many investors concerned about how quickly these bonds can be absorbed by the market without causing significant price swings or other disruptions. Now, let's look at why this is important for you. When the US government issues bonds, it's essentially borrowing money from investors by promising to pay them back with interest over a set period of time. These bonds are considered to be very safe investments since they're backed by the full faith and credit of the US government, which has never defaulted on its debt. However, when the government issues a large amount of bonds all at once, it can have an impact on interest rates and the overall economy. If investors don't want to buy the bonds, then interest rates could rise, making it more expensive for businesses and individuals to borrow money. This could potentially slow down economic growth and even lead to a recession. So you see, there's a lot at stake here. Now let's take a look at the current situation. Currently, the US government is planning to sell $119 billion worth of bonds in 3 separate auctions during the week of May 2023. This is the largest offering of bonds in history. On Monday, they'll sell $35 billion 3-year notes. On Tuesday, they'll sell $24 billion 10-year notes, and on Wednesday, they'll sell $60 billion 30-year bonds. If the government can't sell all of these bonds at a reasonable interest rate, it could cause problems for the economy. Number 2, the Great Debt Dilemma. Why is the US struggling to sell bonds? The US government is struggling to sell $119 billion worth of bonds in an auction. This is the biggest weekly offering of treasuries in history, and investors are worried that there won't be enough demand for all of them. In order for the government to finance its growing deficit, it needs to borrow money by issuing bonds. However, recently, the demand for US bonds has been low, and the government is finding it difficult to find buyers willing to purchase the huge amount of debt it plans on selling. There are a number of factors that are contributing to this problem. First, interest rates have been rising, making bonds less attractive to investors who could earn a higher return elsewhere. Second, the US national debt is growing at an unsustainable rate. This makes investors worried about the government's ability to repay its debt in full. Finally, there's geopolitical uncertainty with Russia and China becoming more aggressive in recent years. This has made investors more risk-averse and less likely to buy bonds. As a result, the government is having trouble finding buyers for its debt. And this is not a good situation because the government needs to borrow money in order to fund its operations. If it can't do that, it will be forced to cut spending, which will hurt the economy. Additionally, if the government defaults on its debt, it would send shockwaves through the financial system and cause chaos in the markets. Number 3, bonds on the brink. Unraveling the $119 billion auction crisis. U.S. Treasury bonds are on the brink of a major auction that could leave the country in financial disarray. Can the government really sell $119 billion worth of bonds? The answer is yes, but it might not happen as planned. If the auction fails, the U.S. government could default on its debt, which would cause a financial crisis. A default would also undermine confidence in the U.S. economy and make it more difficult for the government to borrow money in the future. Moreover, it would also damage America's reputation as a reliable borrower and could lead to higher interest rates on future bond sales. The first step to understanding this complex issue is knowing how bond auctions work. The US government issues bonds to raise money. In this case, it plans to sell $119 billion worth of bonds in 3 separate auctions. Investors submit their bids, and the government accepts the bids that offer the lowest interest rates. The lower the interest rate, the more attractive the bond is to investors, and the more likely they are to bid for it. Now that you understand how bond auctions work, you can start to see why this one is so risky. The government has set the interest rate on the bonds at 4.8%. That might not sound like a big deal, but it's actually very high compared to historical standards. In fact, it's the highest level since 2007, before the Great Recession. Investors are understandably nervous about investing in bonds with such a high interest rate. To make matters worse, there's a lot of uncertainty in the markets right now. The economy is slowing down, and there's a lot of talk about a possible recession. Plus, inflation is still a major concern. All of this uncertainty makes it even more difficult for the government to sell its bonds. So what happens if the auction fails? If the government can't sell all of its bonds, it will have to default on its debt. This would be a first for the United States, and it would have serious consequences. A default would send shockwaves through the financial system and cause chaos in the markets. It would also undermine confidence in the US economy and make it more difficult for the government to borrow money in the future. In short, it would be a disaster. So far, though, the auction process is going well, and there's no indication that the government will default on its debt. However, it is still early in the process. Anything can happen between now and when the auction is completed. We'll just have to wait and see what happens. Number 4, the $119 billion bond challenge. What investors need to know. The upcoming bond auction is one of the biggest challenges for investors in recent times. With $119 billion worth of bonds being sold, there's a lot of uncertainty in the markets. Here are 5 things every investor needs to know. Number 1, what are bond yields? Bond yields are simply the annual interest rate that a bond pays. The higher the yield, the higher the return that investors can expect to receive. However, the higher the yield, the lower the price of the bond. This is because there's an inverse relationship between bond prices and bond yields. So if bond yields go up, then bond prices must come down, and vice versa. Number 2, what are interest rates? Interest rates are simply the percentage that lenders charge borrowers for the use of money. Number 3, what is inflation? Inflation is simply the rate at which prices for goods and services increase over time. When inflation is high, it means that prices are rising quickly. This can be harmful to investors because it means that their money is losing value. For example, if inflation is 3% and you have $1,000 in cash, then your $1,000 will only be worth $998 in 1 year. That's because the prices of goods and services have risen by 3%. Number 4, what is a recession? A recession is simply a period of decline in economic activity. When a recession occurs, it usually means that people are spending less money and businesses are making less profit. This can be bad for investors because it means that companies may earn less money, which can cause their stock prices to fall. Number 5, what is quantitative easing? Quantitative easing is simply when the central bank buys government bonds or other financial assets in order to inject money into the economy. Quantitative easing is often used to help stimulate economic growth or to prevent a recession. However, it can also cause inflation, which can be harmful to investors. Number 5, U.S. Treasury's bond dilemma. Is the economic future at stake? The U.S. Treasury faces a challenging decision as it prepares to sell $119 billion worth of bonds. Will the economic future of the nation be at stake? Only time will tell. The government has been struggling to sell its debt recently, and the upcoming bond sale is the biggest test yet. There are a few reasons for this. First, the amount of debt that the government is trying to sell is huge. $119 billion is a lot of money, and it will be difficult to find buyers for all of those bonds. Second, interest rates have been rising. This makes bonds less attractive to investors who can get a better return elsewhere. Finally, the U.S. national debt is growing at an unsustainable rate. This makes investors worried about the government's ability to repay its debt in full. The Treasury has a few options for dealing with this problem. One option is to raise interest rates on the bonds. This would make them more attractive to investors, but it would also make it more expensive for the government to service its debt. Another option is to cut spending. This would reduce the amount of debt that the government needs to finance, but it would also hurt the economy. Finally, the Treasury could try to borrow money from other sources such as the Federal Reserve. This would avoid raising interest rates or cutting spending, but it would also give the central bank more control over the economy. What do you think the Treasury will do? Let us know in the comments below. Also, if you're interested in learning more about the US bond market, check out our other videos on the topic. We hope that you've enjoyed this video and learned something new. Now, if you have any questions, feel free to leave them in the comments below. We'll do our best to answer them. Thanks for watching, and we'll see you in the next one.